Welcome to the weekly outlook of week number 28. I did not prepare anything. This is literally how I do my weekly outlook. So pay attention. So, as I said in the Discord, Monday, no news. What does that mean? I'm not interested, especially not if you had one, two, three big expansion candles. Then I'm expecting a retracement, consolidation, or potential reversal. As we see, we had a retracement right here. Yeah, and that's not something I want to get involved in. And you shouldn't want to get involved either, because what is this price action? What is this price action, y'all? So we drop down, potentially take some liquidity, and then we come back into the range. We took previous day's low, and then we came back into the range. Now, are these high probability trades? You tell me. You tell me. Man, what is this big ass line? So that's the daily fair value gap. Oh, never mind. That was the thing that I marked. Wait, where was that? I think this was the line that I marked at the outlook. Daily. So the daily fair value gap is confirmed, and I like the way this candle looks. So because we have news, where did I paste this picture? Because we have CPI on Thursday. So I'm thinking about all these economic news releases that you see. I'm using these to indicate to me when volatility is potentially going to kick in. So with that in my mind, I will use session profiles and time of day to determine if it's a high probability setup. Now, if we look at this week's setup and if we look at price, where it's at right now, what is everyone thinking? They're thinking shorts from the daily fair value gap. Now, if we look at the economic calendar, does that validate our idea that we are going to see an immediate move down from the daily fair value gap? No, it does not. Why does it not? Because we have Powell testifying again, CPI, PPI. Oh, CPI with unemployment claims. What? I don't think either I did not pay attention or I didn't see that before. So with all these news, you tell me right now, do you think it's high probability that we are going to see immediate shorts from here? Yes or no? No. And why not? Because time is not backing it. So what are we expecting? We are expecting price to potentially generate liquidity inside of the daily fair value gap, slow grind up, trick people into thinking that we are coming up from this weekly fair value gap, for example, or maybe we might even come up from this weekly fair value gap. Like, you cannot know. Wait, let me close my Telegram because I keep hearing bing, bing, bing. So, okay, we have this high right here. This one is a bit further, it seems like. Okay. Let me take it from the back. That sounds crazy. Let's start from the back. The economic calendar is not indicating that we might see a potential high or low of the week happening on Tuesday. Why? Because we have CPI on Thursday. And what does that mean? Usually when CPI, there's a chance that price, if we have not yet reached a high time frame draw on liquidity and we are trending, then you might be able to get some good trades going, continuing before CPI. But like when price does this, you need to think like, okay, this is how the monthly looks, right? With the previous month low sweep. And then we are closing very close to liquidity. Now, are we bullish or bearish? Clearly bullish. High, low, high. We are coming off discount. We are clearly bullish. We have swept previous months high. Now, with all those reasons, wouldn't it be logical to go up? Like, would it not be logical to go up with those reasons? It would, but is it gonna happen? We don't know. So this was these monthly highs. This was a previous month low. It swept, and then we had a doji candle, and then we were anticipating price to retrace into the weekly fair value gap because that was the most likely manipulation during NFP. Now, I still do think this might be a manipulation. Why? Because it's NFP and CPI back to back. So maybe instead of NFP distributing, like instead of NFP week manipulating and the NFP itself distributing, we might see price getting held right here. And then the release is going to either, I hate saying it, but it's either up or down. Why is it either up or down? Because ideally, if we were to go up, this weekly fair value gap, like if these were trending market conditions, we would not see price retracing into this weekly fair value gap. Why? Because closer draw on liquidity. And if we are trending, you want to see price exit dealing ranges, retest dealing ranges, exit, retest, exit. You don't want to see price action like this. Look at this. Deep retracement, deep retracement, deep retracement, deep retracement, no follow through. And then we have a potential reversal, potential, or it is a weekly retracement to create the monthly power of 3. So those are the two scenarios. Then we have a change in the state of delivery, and then we are going to continue down. And if we are going to continue, where are we going to continue from? Here. And now, this is what I like to do. If this does not continue price down, right? How does every swing pattern form? Like this, correct? Where do we see liquidity? This rejection block, correct? So if we are already all the way back here, is it logical for price to start moving back up? No. When would that be logical? If we exited the week like this, for example, then it will be logical to think, okay, this is a sweep to continue up, but when price is not showing willingness, it is closing below 1, 2 lows with a fair value gap. It is literally telling you that business might potentially not be done here. Like as all probabilities. That's why I never say like, I think this, I think that, because like anything can happen. And that's why you need to be ready. So if we are to go down, where are we going to go down from? I'm expecting the daily fair value gap. If we are to go up, where are we going to go up from? I'm inversing this right now. So we are seeing euro. It's extremely close to this liquidity. I'm going to take GBP USD. Wow, GBP USD is extremely close to here. Wouldn't it be a shame if we left that high untapped? If we are going to go back down, right? So now, even though I am neutral, I framed the whole scenario. I framed the scenario that I'm expecting a weekly breaker pattern if price is going to come back up. And if it's not going to happen, then I have liquidity to target from the daily fair value gap. So, and why do I think it's not going to go up immediately from here? Because we have left this dealing range. Let me show you. So this, we break this high, right? Break, high, low. So this was my daily dealing range. And of course, I would like to see price respect discount, continue up to the draw on liquidity. Why? Because if this is a market maker model, and we know the logic of the market maker model is smart money reversal, and there was SMT with thingy, I think. DXY futures. See, we swept it on the DXY futures. Wow, DXY futures looks crazy. So if this is a market maker model, what is this? Smart money reversal. This looks like the first stage as well, but this is low risk sell. Why? Because the first return into fair value gap or a PD array is low risk sell, and then we have the first stage of distribution potentially here, and then we close above 50% of the range. What does that mean? That means that we are potentially going to the ground liquidity on the second stage of distribution or accumulation extremely fast. Now, did we do that? No, we didn't. Interesting. I want to check something, y'all. Open, low, high, close. Open, low, high, close. Wait, open. Ah, okay. Interesting. What I'm looking at, this candle is bearish, right? And this one is bullish. It's because the open, high, low, and close is different. Okay, I understand why. Because some candles, some brokers display it differently. Some brokers don't leave gaps in price open. You know what I mean? Some brokers just fill the gap with, they use that as price action. Like, remember when I was doing the weekly review and then I opened the hourly chart and then I saw this right here? What I mean. And on the other broker, we had a gap right there. See? Yeah, see? The daily closure is also different here. That's why the daily closure was different. And that's why I got a little bit confused. Like, what the hell was happening? Okay, so where was I? If this was the second stage of accumulation, we would... Wow. So if time is distorting and this is the manipulation, then CPI is going to blast it through here. ASAP. That could happen. But if CPI is going to blast it, what is the logic of price? The logic of price is trapping people. Now, how many people do you think changed their bias right here? If this ends up being the manipulation. And like, I'm not saying it is. It might. My bet is, if this ends up being a manipulation, I'm expecting one more sweep towards this round liquidity. And if it isn't, we have the sweep. We took a little piece of the pie, right? We are done for the week. And then price is going to continue down. So both scenarios, see, both scenarios lead to the same draw on liquidity, the rejection block and this low right here. And if that happens, that's ideal. If it doesn't happen, then I'm not interested in price, because if we disrespect this fair value gap, we are not even coming off. Actually, we are coming off the weekly fair value gap, but to be fair, we are not respecting it at that case. Nor are we respecting it right here. Let's check euro. Nor are we respecting it right here. So if we were to go up, we would go up from our weekly fair value gap, which did not happen. And of course, price is not perfect. That's why I'm not saying this is not a that this is not a Judas swing. This might still be the Judas swing. Continue to this round liquidity, but if it isn't, we can still milk. Why? Because then we are taking previous week low, and then we're done for the week basically, and then we are gonna assess by how aggressive price leaves dealing ranges, if it is truly a reversal or not. Because damn, where was that? Let me show you guys. I was looking at price today, I think, and I saw something. Which price action was that? Which price action, please? I think maybe... I was going through all chart work, I think. It was about the willingness of price. I'm gonna give a little gem right now for the people that are paying attention to. When price is in trending environments, we are going to see stuff like this, okay? And then everyone is going to be like... So please pay attention right now, because this is important. When we are in trending environments, we are going to see price doing stuff like this. And then it's not going to retrace deep. Why? Because there's potentially a breaker or a daily fair value gap. So if there's a daily fair value gap holding price back, or a fair value gap on the lower time frame, then what is the logic of price to flip that fair value gap? Then it becomes inverse, and then we go up, right? So a lot of people, like right now, when they are trading DXY and it's trending like this, where it's always where it's always retracing deep, they will get wrecked when it starts to rip again. Why? Because when price is trending like real trending, we do not stay in existing dealing ranges because we have no, like, that's how you understand the willingness of price. So when we close under here, we want to see a displacement through here with a fair value gap. Let me actually make this a bit smarter. And then we do not want to see price come back all the way here. We want to see it like retest the dealing range or retest the fair value gap and immediately go. Because that's just the characteristics of trending markets. And that's why I need you guys to study those in comparison to DXY right here. Because now everyone is getting trapped into having this view of price that is always this, like, because this is, in my opinion, this is easy to trade. Because like you just wait for discount, continuation. Wait for discount, continuation. Wait for discount, continuation. But in trending markets, where price goes, like look at this. Price just keeps going. Did we tap discount? Nope. And there's a new break. Or did we tap discount? Let me check. Nope. And then there's the new break. So high to the swing low, I guess. Did we return all the way back into discount? Nope. Break right here. Did we return all the way back to discount? Yes. And while we returned to discount, did we close under it? And did we get a change in the state of delivery? No. We continue. And that's why you don't turn bearish instantly. See, like what I just said. When we are trending, we are just going to retest the lower quadrant. Continue. I mean the upper quadrant of this wick. Continue. These are characteristics of a trending market. And we are not trending right now. We are just retracing and then continuing. Retrace, continue. Retrace, continue. So I hope you guys understand that once we see trending price action, that you are not going to be like these NPCs, because I went over it a lot of time. I said it a lot of times. If the range is trending down, and let's say this is the H4, but you have a daily fair value gap right here, and this is the H4 range. There's a big ass daily fair value gap right here. You already hear it. Premium array. If a fair value gap, daily fair value gap is overriding the H4 range, then we use that daily fair value gap. And that's why when you see trending price action, you need to look at the price, look at like the PD arrays that are closest and monitor reactions, because when it goes, like, that's the logic of price. When it goes, we are not going to get that a lot of people in. You feel me? And that's why when this goes, you don't wait for price to come all the way right here and then continue, okay? Why? Because, okay, this is premium, this is, and this right here is discount, premium, discount. But this daily fair value gap, we don't call that a discount array. This is a premium array. Why? Because it's like the PD array matrix goes from premium to discount arrays, right? So this is premium, where we are going to look to continue to these prices from. And that's why when I say, I made a tweet like, when price is going without you, you don't chase price, you wait to see which areas you'd like to transact from. So which premium or discount levels you'd like to transact from. Now, this is discount, yes. Premium, yes. But this is also a premium. And with the logic of price, if there's a lot of trap traders right here, do you think it's going to retrace all the way back up? No, we are going to use the most nearby premium to continue down. And beside that, we already came off premium right here of the weekly premium. So why would we have to go back to the daily premium? You know what I mean? I just gave y'all the sauce because I never like I didn't understand why is the price not retracing. It's just ripping and ripping and ripping and ripping. It didn't make sense. I studied. Premium and discount arrays. It's not just like people teach everything so wrong. It is a confluence of everything. Time frame alignment. If there's a daily fair value gap, but it's in discount of the H4 range, like right now. Obviously, this is not the nicest. These ranges are not the nicest. Let me try and find a cleaner one. There's no swing low. Give me a second, y'all. I want to give an example. So swing high, change in state of delivery, retest the breaker. So then this is our new range, right? I will draw it out for you. Why? Actually, this. So this is low, slow. And you could use this as a breaker too. Let's just use this example. Close under here, new low, new high. Close under here, new low, new high. Close under here, new low, new high. Close above this high, change in state of delivery. Why? Because there's a high that rebalances a fair value gap. And we have this low to this high. But obviously we know that it won't retrace deep because there's a break pattern right here. Let me prove it real quick. Okay, we retraced into discount. And then we close above here. Now, I'm gonna mark out this in blue, daily fair value gap. So the daily fair value gap is right here, right? Double check. Daily fair value gap is right here. Do you think, like this is an example, like I'm not saying treasuries are going higher, I'm giving you an example. If you think we are bullish treasuries right now, I just say we are going to continue, we are betting on this, on that this is going to continue up, right? Then where do I want to see it go up from? This is an example right now. I didn't analyze treasuries yet, treasury bonds. So where are we going to go up from? Now, people that are too zoomed in are going to look, are going to see, okay, this is the H4 range. So I want to see a reaction on this order block right here. And then I'm going to look for continuations. But that doesn't make sense. If we are trending, you are not going to give the opportunity on people that are waiting with limits right here to enter. It doesn't make sense. Then it's the easiest market ever, right? So, and this looks like a market maker model. Why? Smart money reversal, low risk buy, first stage, and this is the second stage. So it should be explosive. So even with the confluence of that this should be explosive, this discount rate should hold price up. The discount daily fair value gap. This was a weekly outlook, but it was also a lesson. So I'm gonna put it in case studies as well. Oh, my days, I'm so tired. I got so much to do, man. I'm so tired. Like it just doesn't end figuring out this market. Now let's do a outlook on treasuries. It ain't looking clean, bro. Remember I said we are coming off a breaker. And then I was like, what the hell? And we dump down, create another breaker, create another breaker, create another breaker. Like these conditions are so ass. But if we are respecting premium or discount, clearly looks like we are respecting discount arrays. Then we have this discount fair value gap where we will look for reactions from price. So if this is bullish, it means euro is bullish. So if we are to go up, where are we going to go up from? This daily fair value gap. If we are to go down, where are we going to go down from? Oh, we should have went down from this sweep, but we didn't. So the next targets are sweep right here. We already sweep this. The next targets are to see how aggressive we close above the sweep, and that would give us more price, more information on price. Remember what I just said? You want to see the willingness of price to exit existing dealing ranges. And this would back up our sentiment on the EU. This is a redelivered rebalance, so this should be extremely how do you call it? Sensitive. Wow, gold's daily close is crazy. When I had my chart open, it was like this. Yeah, so if you are to go down, we want to see a reaction on the daily fair value gap. It ain't that deep. It ain't rocket science, y'all. Even though people want to act like it's rocket science on Twitter. But do you think they're making money? Do you think... Wait. 12th of June? Uh-huh. We already swept that on EU. Do you sweep this high on EU? Not yet. Look how beautiful this looks. This looks beautiful. A lot of people are going to think like, okay, this is a big wick. It's going to go down, down, down. We are exhausted. Support and resistance. We are at support, resistance, so we're going to go down to support. I like that. Yeah, I hope this lecture helped y'all. So what am I going to call it? Weekly review for week 28. And why price won't retrace deep. Time frame alignment or something. I'll come up with a title, but to recap, we are going to look at if this premium array is going to give us a reaction, because price obviously does not reverse like this. We're going to either this or swing failure. Bonus going up. Let me check. Excuse me. Hi guys, thanks for watching. Thanks a lot. I think this lecture was very useful. And good luck trading. I'll update my sentiment throughout. And I hope this lecture helped y'all, because this will make you understand the logic of price, because not many people understand the logic of price. They just trade patterns thinking they're smart money, quote unquote, but it doesn't make sense. Alright, peace.